Shake my hand, everybody. Shake my hand. Ladies and gentlemen, shake my hand. Thank you so much for joining me. Sorry for the delay, with the live stream. It's just been a crazy, crazy Mother's Day. Happy Mother's Day to all the mummies out there. I really had to dabble with a couple of things. So yeah, just got back in from our celebration. Hope all of you are doing well. Hope every single one of you is doing well. Welcome to another War Room. This is War Room number 66. We've got about 15 assets to look at today. I tried to bring back some assets that we're still waiting for, so pending orders, just to kind of like see where markets are and if we need to review those particular trade ideas. All right, so I definitely I don't want to forget a lot of the trade plays that we have. Tomorrow I will do a special video. I did say week after week I'll give you guys results of the week. And my goodness, this past trading week was beautiful with indices, NASDAQ profits, Russell 2000 profits, US 30 profits. My Nikkei 225 actually came back, then dropped again, so still in profits. And then we'll talk about my stop loss hits in AUD Swiss franc and Euro pound. Yeah, and then a few other orders that were not yet tagged. So it was a very good profitable week this past week. And this was based off War Room 65 trade ideas. It was very nice, a beautiful time to trade indices if you're looking for a bump in a lot of money, because with FOMC, but with job data, we had job listing on Tuesday. There's a lot of stuff going on in the market this week. So there's a lot of volatility. So that's what happened. If you could just allow me to just get my headspace together. I just ran into my office and just hit the live button. Yeah, right. So today, guys, I want to look at the S&P 500 again, the NASDAQ 100, US 30, NZDUSD, the pound CAD, Palladium, gold, EURUSD, AUD Swiss franc, Euro pound. Right, that's quite interesting because I was actually stopped out of Euro pound, and I want to actually, kind of like, make sense of what happened there. Silver, CAD Swiss franc, and AUDUSD, and finally NZDJPY. All right, pleasure, man. Not a problem, Mr. Togozilo. Good to see you, though. Right, so that's what we're gonna do, and then if there's more time, we can then look at more assets, right? But if we can just quickly, those of you who know the drill during the war rooms, and it's been a long time since I've done one live. I've actually now preferred to pre-record in the morning on Sundays. But yeah, we kind of like need to, guys. Tomorrow is a weird day. It's very hard. I just can't wrap my head around it personally. Tomorrow is a weird day in the markets, right? Tomorrow, we actually have May the 9th, which was originally in Russia, was a celebration for when, Russia overcame the Nazis, right, back in the day. There's a lot of speculation of what Putin is going to do tomorrow, all right? I don't know how true it is. I mean, I'm not even interested in a lot of market speculation, but there are rumors that he could declare it a victory day, in relation to the Ukraine war. He could then intensify the war, all sorts of things, going on there. So I'm not entirely sure, but I would encourage you, if you're like me, I managed to get about half of my trades into very good stop loss protection positions. So I just, locked profits where I could. Right, and I'll finish the other half at midnight to today, when markets open. It's something you just need to break even and just wait and see. I can't give you a call. I don't know how the markets are going to react to what it is he's going to say, because he hasn't said it. I don't mind doing a quick analysis, after it's been said, right? But for the most part, yeah, you will talk about how the markets play, right? So in pre-market close, NASDAQ is down, S&P 500 is down, Dow's down, which is pretty much our analysis last week Sunday, right? That we're going to have another sell-off this week, which we did. Oil is back and above about 110, US dollars, which is actually a signal. As long as the oil stays above $100, to just kind of like tell yourself there's something wrong in the world, right? So commodities are going up, etc., and so the inverse is going to happen. You're going to see the burn in risk-sensitive assets, your Bitcoin, your equities, the stocks, etc. All right. And in terms of headlines, I'm not going to spend more than 5 minutes on this stuff. Yeah, there's actually nothing I care for here. There's absolutely nothing I care for here, right? But yeah. So I think it's going to be an interesting week. Yesterday on Saturday, while we're still on the road, I did pick up that there was a little bit of bullish news on the market space. So one of the very, very hawkish members of the FOMC. Remember, the FOMC is split. There's Powell, then there's dovish members, and then there's hawkish members. Dovish members don't want the interest rates to go up as aggressively as they could go up. They want 0.25, or let's wait and see if recession will just be transitory. Hawkish members of the FOMC want 0.50, 0.75. They want that aggressiveness. They believe that people are right, that we are behind. Shake my hand, Mr. Ambassador. Good to see you, buddy. Right. So there's that kind of like dynamic, right, within the FOMC. But the most hawkish members came out yesterday and said, it seems, by their calculation that things are working. What Powell is doing is starting to work, and that 0.50 that we got last week, and another 0.50 in the next meeting, and another 0.50 in the next meeting could be all the market needs to kind of like recalibrate, catch up with inflation, and cool things down. That's number one. Number two, Bullard said also that he believed that inflation had peaked. He shared the same sentiment as Powell. Obviously, we'll all see proof of this with this week's CPI reading, right? CPI will be a big thing to prove if that was actually the peak of inflation or has CPI gotten worse and worse and worse, right? So we'll see who's right or wrong, the markets or the FOMC. But in any case, outside of May the 9th and whatever Russia is going to do in the markets, right, tomorrow should be a normal rally day. All right, that's a lot of good news that the markets want to kind of like dig into. But to bring to your attention, and I apologize for a second, I'm going to have to kill the light, my cam for just 2 seconds. It's literally blinding. My camera flashlight is blinding. There we go. I was actually starting to struggle to see through my charts. Right. Thank you for your patience with me. That's so much better. Otherwise, I'm just going to be dizzy by the time, we're done recording, right? I think that should be good enough for now, right? So it got me thinking, right? We could see a rally, and these are the kind of things that traders don't understand. During this past week, we kept talking about, NASDAQ and all these assets are going to fall. We explained why, based off supply and demand, because that's what we used to trade, and price eventually fell. Right, but if you go back to my previous war room on Sunday, I drew for you a lot of bearish engulfing patterns. And what a lot of retail traders were buying this past week, they were simply buying the retest to go test those bearish, supply levels that will push price down. And I did a private video, for students only in the private Telegram group, explaining to them that most of those buys into there, they actually used a lot of retail traders to stop them out, even though price was going to go up there, right? A lot of them got choked out of those positions, and selling was the only definite risk-free profitable route to take, right? So now I'm going to show you Bitcoin, because then again, we traveled, just briefly this weekend, left Friday end of day-ish, and just got back in right now. And wherever I was, someone was talking about Bitcoin, and I just want to, squeeze this in here. And they're talking about flag patterns, right? This is a bearish flag pattern. It's a bit too late now because it's already happened. But I want to teach you something very, very quickly around flag patterns and just patterns in general as a trader. So I'm going to mark, the flag a different color so that you see it. I'm going to make it black. That's probably not a good color. But that flashlight is still in my face. Well, the after effects is still in my face right now. I don't know. I'm just looking for a good color, guys. So I apologize. Let's make it blue. Doesn't matter. Right. And then I'm going to make it a little bit big. I'm going to give it there we go. So you see that blue line in front of you, and there's another line. Now, let's just pretend this thing hasn't broken out. Right. So let's just pretend this has not yet happened. Right. And I did post again in my public Telegram group that there's going to be a Bitcoin dump this weekend. If you're selling like me, you started selling up there, hold. We in that money. Just hold. Right. But also, as you hold, and as this week craziness this week happens, as Russia happens, as markets try to recover based off the fact that one of the most hawkish members in the FOMC has said that there's no longer a need to be aggressively hawkish, that what Powell is doing is working, and markets might start to take that as a dovish signal, and the stock market want to rally on that kind of stuff. Please note that all rallies are subjected to supply and demand, because supply and demand studies the actual financial flow of money. So where money is lodged the most, that's where price is going to go. It's as simple as that. It doesn't matter how I feel, how we feel about the markets. The markets only move in the direction of flow of money. If they put money to sell side for whatever reasons they want to do that, that's where money is going to go. Our job as smart money concept traders or supply and demand traders or whatever that drama is in that fight about what traders we are, our job is quite simple. Understand the structure, understand the levels, get the direction right, and then you match yourself with that. All right, it's that simple. If other people are buying in a week of selling, let them enjoy it, let them make their money, all power to them. But if that's not your trading strategy and you haven't mastered that particular methodology, don't prostitute your capital. You're going to need it for the future when markets are easier to read for you. The problem is by the time you get to a place of mastery, you have destroyed your trading psychology, because all you know in this market is losing, right? And you're not being honest about why you lose. You're not losing because markets are against you. You're losing because you're breaking your own rules. All right, so I want to quickly draw some structure here. Generally speaking, when I travel with my family, just so people know, I love talking about markets, and I really do. And I don't mind being stopped anywhere at the garage, at Pick and Pay. We'll have a fat chat until my partner comes and gets me. But yeah, this conversation I was not really in the mood for, because we just had a limited time to be intimate together as a family. But I had fun. I had fun talking about this. Right. So in front of us here is an interesting structure. Now, with these flag patterns, it's just something to be mindful of. What do they mean? I know they're covered in a lot of textbooks, but they're unfortunately not covered in the way that would help you. This is last year, January 2001, where Bitcoin started to create an interesting flag pattern, right? And this is all I want you to kind of like take note of when I say flag pattern, right? So there's a base here. You can call it a triangle, whatever makes you happy, right? Markets keep doing something like this, right? And you can see the direction of the flag pattern, right? The flag pattern, guys, if you can't see it, just draw a trend line on top of it. If you know point A, point B, you can start to see, oh, okay, fine, this is going down, right? Because each point gets a little bit lower and lower, and this is going to be important. It's going to help those of you who are just visiting our channel and not supply and demand traders, and instead like to use technical analysis, in this particular abbreviated sense. Now, this is a flag pattern pointing to the downside. You will see this on any chart, but I'll talk about it on Bitcoin. You're going to find it on NASDAQ. It really doesn't matter. When your flag pattern points to the downside, it is a call. It's a technical analysis signal, a call for bullish movement. It just plays with the mind. A lot of retail traders, let me just say, a lot of traders in general always assume because it's going down, the break of structure is going to happen at the bottom. The flag direction is not an indication of where price is going. It's a trick. It's the opposite, right? We call this a bull flag. It's a flag pattern, right? It's got many names. My point is, this is a call. Why? Because investors need to come in at a point in time when they can get the best deal. Buy low, okay? And the structure is pushing price downward. So this person I was talking to this past weekend looked at this thing and they thought, oh, wow, look, man, we're a bullish flag or we're a flag pattern, and he's really looking at the compression of price, right? He just thinks all of these patterns are the same. And this compression of price was a downward bull flag, right? There's an entire flag pole. You know a flag, right? Because it's a pole and then the flag is by the side. The entire flag pole here is extremely bullish, holding it up. So the price is most likely to break out to the upside. All right. Price is most likely to break out. If you followed my content last year, I covered all of this particular breakdown in price. because this flag pattern was very different, like the one we have now. And I really don't care for patterns and price. I don't care for price action that only kind of like looks at, sequence and memorization of candlesticks. That's not how I trade. But for those of you who want to remain those type of traders, this is important. Now, look at this particular flag. Markets come down, but then make a slightly higher point and then come back down. And then so here, if you were to draw a trend line before obviously price broke out, before price broke out, if you were to draw a trend line from point A to point B, it would look something like this, right? So technically speaking, this flag is moving upwards, which should be a signal to you that the opposite is about to occur. It keeps pushing higher and higher to sell higher, right? You never sell low, not if you're smart money. If you're smart money, the best deal is selling at the highs, right? So it's not too late, but it's kind of like too late now because price has already broken through the structure. But it is definitely not too late because since the beginning of the year, I've been persistent about Bitcoin, no matter what, no matter who says what, no matter if it's the biggest whale on the planet, Bitcoin is going to have a beautiful, tough year. And I say beautiful because it is the once in a lifetime opportunity. 2022 is the 1 year where if you miss the buzz in 2017, 2018, you missed the buzz in 2014 and 2012, you missed the buzz in 2020 when Bitcoin was 4,000. 2022, according to my reasonable calculations, the next 6 to 12 months are the last time it'll be very easy to make money while you sleep. We want this thing to crash, my people. We need more sell pressure. Sell pressure is coming in. As long as institutions want Bitcoin, which they now do, they want it in their public ledgers, this is going to come down, right? My first target, like I said, from the past, I've said this many times, is 30,000 US dollars. I am not wavering from this. It is my prayer and hope that we get to see about 20,000 US dollars. And people laugh at me. People laughed at me when I said about Bitcoin at 65. Then they laughed at me when I said about 50. And then at 40,000, they laughed even harder. And then Bitcoin came as low as 37,000. And all of a sudden, people stopped sending me inboxes laughing at me. They were just quiet. Now today, we're trading about 34,000 and 30,000 US dollars is real. People laughed at me when I said Nasdaq could come back to very pre-COVID levels and potentially pre-COVID levels. Everybody's been trying to prop Nasdaq price up with their little money buying that thing. They were wrong, right? You can make money as a trader buying or selling. Do not become psychologically, emotionally attached to the profile of an asset. We want to profile our assets and understand these are buy profile assets. But that profile manifests and works best during an uptrend. If the asset is not in an uptrend, even though it's a buy profile asset, as a trader, you switch because the governor, if you go back to my module 1, we do what the immediate governing order blocks are doing. Governors are found on the highest time frame possible, number 1. Number 2, immediate looks at the holistic structure and where price is going between point A to point B. And some governors are 6, 7, 8, 9 months apart. Some governors are only 3 months apart. But if the last place price left was a supply, it is going to a demand. Keep it simple. Keep it as simple as possible. You'll be okay. All right, so price has broken out of this structure, this flag structure. I'm very happy about that. Please take note of the fact that there was a bearish engulfing pattern just to solidify this break, trying to break this psychological level here. You can see markets have really closed above 37,427 several times on February, many days in February, a couple of days in March, came and set at this level again in April, right? So for almost 4 months, Bitcoin tried to protect this area. Retail traders tried to protect this area. And we needed a strong bearish engulfing candle to completely remove it, right? So there is absolutely nothing I fear along the way here. I don't mind if there are 3 or 4 green days this coming week. It really won't shock me too much. If there is a big reboot, I'm hoping that price will stop somewhere here. I'm hoping that there'll be enough sell pressure to kind of like liquidate, but I'm pretty sure by Monday I would have moved most of my sells and kind of like lock profits just above this area. And I'll most likely, knowing me, I'll most likely open a new sell limit level here. If that doesn't work out and I get stopped out, it wouldn't matter. I've made quite a bit of money selling, right? In fact, I regret my earlier sales that I kept closing. I had good sales somewhere up there. Eventually they had to be liquidated, but I closed somewhere down here. All right, so this is the move I see in Bitcoin. I'm not doing anything else about this chart, which then moves us to American equities, right? The indices, SP 500, NASDAQ. If we can just look at those right now, what a beautiful, profitable week. I think I was finally triggered for the second sell, pretty much during or after FOMC. And markets just kind of like played ball. NFP came out. Talk about NFP for 2 seconds. I don't care about the headlines. I'll cover market sentiment during the week, if that's okay with you. I'll cover market sentiment during the week. I don't know if my little boy is just kind of like playing PlayStation or what, but it's definitely affecting my internet. Right, so NFP came out. I told you guys a couple of things. Number one, look, man, ADP reported a loss. So logically, most of the time, the logic is if ADP found a missing 100 and something jobs and they did a good job, then NFP should report something similar. We're a complete, split again, right? ADP reported their own thing. NFP actually found positive job creations, right? And I say to you guys, it wouldn't matter. Right, I said it twice. It would not matter. Some months NFP is everything in the markets. There are some months where there's nothing else happening, and NFP is going to be the most volatile things. The reason why a lot of traders got burnt on Friday was because they saw positive NFP and they thought buy. In fact, on Friday, just before we got on the road at 4 o'clock, I went to that popular NASDAQ and index, whatever page, and a lot of people were like, it's going to be a buy, it's going to be a buy. I told you it was a buy. And they're referring to a spike. Markets just spiked at 2:30. And the reason for that was, even though you got a good job beat, right? I said, never forget, NFP is a package. Sometimes the non-farm employment change is the most important, but a lot of the times it won't make a difference how many jobs the economy creates if unemployment keeps going up. It's an economic paradox. We have many job creations, many jobs are filled, but unemployment is also going up, right? That has to be fixed. So unemployment went a little bit up, right, to 3.6, and then the average hourly earnings actually went down. Because we're in an inflation cycle, this is actually good news that it went down. If it had gone up 0.5, then the sell-off would have been more brutal, right? But NASDAQ sold because it was already selling, because it's supposed to sell, because markets have nowhere else to go right now but to go down. But it didn't help that the unemployment rate came back higher than expected, which means the markets were like, but Powell on Wednesday just said everything is fine, that the economy is doing well, that recession isn't going to come, that they're going to control inflation, that they're going to keep the job numbers well. But look at what is going on. According to the data, unemployment rate is starting to go up. Obviously, markets freaked out and sold. All right, so that's what happened with NFP. But it was kind of like quite clear, what the play for the week was during these particular war rooms, right? I know I'm going a little bit fast. I'm going to start to slow down now that we are actually looking at our first chart of the day. I just brought up Bitcoin because I thought it'll be important to share with you, right? So I've got S&P 500 here first, so we're going to look at that. So we spoke about S&P 500 last week. I told you guys to sell, where to sell. I mean, it's all there. It's all there. Just go to War Room 65 before it all happens. It's all there for those of you who are new to the channel and you think we're just one of those traders who reverse charts and view charts. This is the real deal here. We normally like to forecast before it happens. And if we're wrong, we have no problem telling you that we are wrong. The reason why we don't often talk about why we are wrong is because often we are not wrong. It's not being cocky. I'm just simply laying it out as it is. I have no problem telling you when I lose money. It's just not something that I sequentially now go through as a trader. All right, I've gone through that. I was a consistent loser for 4 years. So there's absolutely nothing shy about this whole losing process thing, right? But I am a proud supply and demand trader for this reason, right? So We've got a downtrend, guys. We've got another big demand that's been removed here. You know, my S&P 500 chart is not as detailed as my NASDAQ chart. In some way here, you've seen a broken market structure, break of structure, you know, this uptrend that came to an end. You got to listen to this logic here. These guys pumped this market for almost 18 months during the money printing. The COVID QE quantitative easing all the way to the end of December 21 when they started to taper. Now, those of you who are religious about the stuff we drop on this channel, I appreciate you. But more importantly, above your appreciation, I pray your knowledge multiplies. I pray that your time is not in vain. And this is why I'll show up. I'll show up for one person on the live stream. I will always try my best to show up for your learning. Now, on Wednesday, Powell said, you know, someone asked a question and he spoke about supply and demand in different ways. And I kept trying to explain the different types. But there was one question where the press said, what about these assets? Are you going to come up with this stock? He asked a direct question. And Powell said, well, you know that if things go out of control, we have to curtail the demand. And then I say to you guys, well, you got to think about it this way. Right? What's demand? What's he talking about? Here we're talking about the wealthy people. Why? Wealthy people, demand means buy. I can buy stuff. Wealthy people own homes. What was the 2008 financial crisis? It wasn't just a random crisis. It was a banking housing crisis. So you got to crush the housing market. That crisis is coming. I promise you. I promise you. Another housing crisis is coming. I promise you. The stock market crash is still going to get a little bit deeper. It doesn't matter if you've got 2 good weeks, all right? Don't buy the cuckoo juice, all right? The markets can't fall every single day, drop. There'll be a few green days, but the trend is going down. Your crypto needs to crash. There are so many coins now. It drives me mad when I'm doing my research for wealthy in 3 years for good projects. Most crypto tokens that we have today in about 8 years' time will not exist. And the only way to wipe them out is to bring their value down to 0 and test the utility. All right, so for investors, it's a tricky ball game. You need to do this thing quite smart. And when that's done and dusted, and the remaining 100 or 200 or 50, whatever the number is of coins that are really good utility, Bitcoin goes to 500,000 to 1 million and pulls really good coins with them. So that's why in the Wealthy in 3 Years program, we have to be very meticulous about what we want a dollar cost average in. All right, so wealthy equals homes, homeowners. He wants to not punish, but he wants to slow down this wealthy group of people who own homes, who own wealth. He wants to slow down this group of people who own assets like homes, but also, ladies and gentlemen, assets like stocks. The stock market, stocks are an asset. Elon Musk bought Twitter without fronting the cash up front. He had a couple of people put in about 20 billion, and then the rest of it use it as collateral against an asset called Tesla stocks. As stocks are assets. If the stock market is going crazy, very bullish, wildly bullish, up, to the moon, with no end, that particular market is at a very high risk of blowing up the entire economy, including people who don't even invest in the markets. So the job of the FOMC, the Federal Reserve, your reserve bank in your African country, is to simply ensure that there is a controlled measure. It's an old economic philosophy called Keynesianism, right? And Keynes came through just after the war when capitalism was starting to boom again after Great Depression. And his argument was there must be a body in government to manage the economy. And this is what's going on right now. Big bull run in the stocks assets, right? This is ridiculous. And now we're going through a very important correction. Markets here to me look like those almost like a consolidation rate. But if I keep waking up week after week and I start to notice week after week that demands are being taken out on a daily and weekly time frame, I am forced to consider the very idea that eventually markets have to continue going down. And my targets for this type of analysis are always what my governor is saying, because price is not random. It's not. It is not. It is heavily manipulated, extremely priced in, extremely planned for. Human beings in the markets are random because they don't listen, because they don't care, because there are 400 different trading strategies, 1,000 different bots, 700 million different algorithms, and 15 billion indicators on different traders. That's what makes this game random. But the pure markets themselves, when we say we don't want to use indicators, we want to purely understand price for what it is. We are simply looking at supply and demand. We've got a bearish engulfing candle, supply. We've got a second follow-up, which is retesting the first one, supply. If price was to go up for 2 weeks just to get up here on the governing time frame, I would not be shocked. I would also not sell my chickens and start buying back into the market because I think price is going up, right? So when I'm looking at the S&P 500, there's nothing. There's absolutely nothing stopping price from dropping all the way down there. In fact, there's nothing stopping price if it was aiming for a very good golden ratio discount for the next big buy all the way down there. Well, I've already kind of like marked this level. Yes, it is very possible that in the month of May and June, and June is a very big month in the market when these guys go into their summer holiday, right? Where price starts to slow down, right? In the summer markets, you're stuck in Africa during winter, not knowing what's going on. It's because these bankers have now gone on holiday and it's thin liquidity in the markets. We'll talk about that when the time comes. So I would not be surprised in June if, or in May, in preparation for that, we get a run like that. But in any case, in any venture, markets have to go down. All right. So to give out a signal, because I feel like all I'm doing is teaching and we're going to be here until 8 p.m. Right. Sell structure side for me is still continuing. And if I check my trading journal, I'm still on. Right. So there's nothing I can do right now. I'm still in price. I'm still in the same signal I gave you guys last week, Sunday. All right. Holding a sell. This structure is S&P 500. Straight after this chart, we're going to go look at the NASDAQ. We had the same thing happen. Straight after the FOMC talk, markets rallied here. Sharp break, breaking off anyone here. Tough break in here. Markets running to the sell side area. Markets fell. All right. And then all of a sudden, these lower lows here, to me personally, seem like they've been removed. And this is for traders who want to understand swing highs, swing lows, right? So S&P 500, I'm wrong, has not yet been removed, but I know the NASDAQ has removed it, and we covered this last week. The NASDAQ moves first 9 out of 10 times. S&P 500 will follow, will melt along, right? Number one. So this demand here, folks, has not been broken. What does this mean? Does it mean you can buy on Monday? Well, what are the rules about touches in areas of value? What are the rules about how deep price can pierce an order block, right? It's not just identifying any and every order block that works. Markets have pierced over 70% of this entire area, which means most of the buys in here could only push price all the way up there. That's what most of the buys could do. And immediately there was still enough sell pressure to come back down. And then the next green candle on Friday went as high based on NFP, positive NFP, but terrible unemployment. Markets could not break above this structure. You'll see I have drawn the similar structure on the NASDAQ, right? To me, in fact, I would go on to say, I'm happy to be proven wrong, but I'd go on to say markets have gone out of their way to retest a new bearish engulfing pattern, which means this might be another doorway to the downside this coming week. This is on a 2-hour time frame, and this is what it looks like on H4. On H4, it looks like you simply have a PCP, a continuation of the downside, and then on the daily time frame, you just have price sitting on top of an exhausted demand, a non-existent demand. But it's absolutely important that price closes below this red line, right? We call that taking out a low. Markets need to take out this low. And then we are granted a good push. If markets don't, then the daily time frame is telling me, be patient. Don't worry, be patient. Don't worry, wait for price to come somewhere here and then start to looking for sell setup. Markets might go a little bit deeper, right, in the H4, H2 area like it did here, but I know that the next sell side is somewhere up there. If markets don't break the slope first, and they need to go back up to take some sell orders, I'm perfectly fine holding last week's sells until they do that, right? It's just that there's not much in the price. Like if you look at H4, we've just got this weird range. And if you look at H2, we've just got this weird range. So if markets start to go too aggressively above, then I'm probably going to have to take profits and then wait and see what last week's other levels look like. Remember, we spoke about 2 selling positions on the S&P 500 and NASDAQ and all that kind of stuff. If this area doesn't work, we're going to come sell up here. So if there's nowhere for price to rally into it, markets feel like this area has been exhausted, and then the danger is then don't trade at glass effect level, then come park up here. You will know how and when markets first clear this area. I don't expect you to be in a buy. If you're in a buy, that's fine, completely fine, and it's up to you. If you can catch a good buy, good for you. But if markets make it all the way up there, dare I say, that's going to be a very good sell. That's going to be a very good sell. And this just reminds me of one thing to bring up. That reminds me of one thing to bring up, as quickly as possible. If I can just bring up the whiteboard to screen 3, that would be great. And it's just to do with crypto and investing long term. Guys, my heart of hearts, I feel like in 2022, I'm going to reflectively. So when I look 5 years from now, 3 years from now, I'm going to look back at 2022 and believe I made the most money in my entire trading career by all the investing and trade calls I'm making right now, the long-term trade calls I'm making right now. 2022 historically is going to be one of my best investing years in the crypto space. I promise you. Now, I want to just quickly, just to clarify a couple of things. Bitcoin is going down. And if you're part of the Wealth in 3 Years program, etc., you're going to see me act like everything is Gucci in the world, and I'm going to be giving you guys more things to invest in this coming week. But you're probably going to start to think I've lost it, because the idea really, why are my tools not working? None of my tools are working. Okay, it's always like that when I share my screen. Anyways, in any case, this thing is going down, right? If I can't do it here on the whiteboard, then we'll do it on TradeView. We'll do it on TradeView. We're not going to be defeated. We're not going to be defeated. Right, so there we go. I just need space. You have to change your mind about how these things affect you psychologically. And yeah, trading psychology is a big topic for traders. But let's say you're not trading and you are buying, your dollar cost averaging. Let's say the price of Bitcoin is going to be $500. It's probably going to be 500,000, 5 million, doesn't matter. Let's use simple numbers, $500. I want you to understand this thing as quickly as possible, and then we're going to move back into our signals. And right now, Bitcoin is at $100 today. All right, the price of Bitcoin today is at $100, but all the market gurus are saying Bitcoin is going to the moon. It's going to be worth $500. What that psychologically means is Bitcoin is going to be 5 times the value of what it is today. All right, that's what it means. Which means if you put $100 in the market, you're going to get 5 times more for holding. All right, now check this out. If Bitcoin does the opposite today, instead of going to the moon, starts to drop, and now the price of Bitcoin today is $50, a lot of people will shut down. And that is all smart money wants. It's like in the stock market with shares. If NASDAQ is crashing, it means big companies, the value of those shares are crashing, which is a lot of shareholders. People put their pension fund. People have been holding NASDAQ before I even started trading are now selling their shares. They're like, damn, when I bought NASDAQ, it was $1,000. Now the price is about 8,000 or 12,000, whatever. I better sell now than lose more money. As those people are selling shares, somebody on the other side is buying them. Institutions are buying them out of people's pockets. People, there's a story in the Bible, not to get biblical, but there's a guy in the Bible who trades his entire birthright, his inheritance, for a bowl of soup because he's so hungry and so thirsty. His scandalous brother tricks the father, into giving him his birth. No, I mixed up the stories. Oh, no, Esau actually agrees, right, to sell his entire birthright for a bowl of soup. That's what's happening when you sell your crypto, when you deleverage yourself. I'm not your financial advisor. I'm simply giving you an analogy that if you are very short-sighted or you lack the ability to be long-sighted, right, you will literally trade an incredible wealth inheritance for a bowl of soup. if price was to go down to Bitcoin, the evaluation, the utility value of that asset has not changed, right? If it's going to be 500,000, then it's going to be 500,000. It has not changed. What's going to happen though is now, instead of you getting 5 times the value of money, you are going to get 10 times, because from $50 to $500, Bitcoin now needs to 10x, which means if you change the way you think about this optics is as price is going down, you are buying more, because you understand that eventually, right, price is going to equalize with its actual evaluation. Does that make sense? All right. I'm going to leave it there. You know, take it or leave it. I'm going to leave it there. All right. By the way, if you're not in it, I run a wealthy in 3 years program where I list all these great assets, you know, for a stupid price. You see my entire investing plan. The link is somewhere down below if you ever want to kind of like join that thing. But this is long term. And the Fed and the FOMC, when they are killing demand, right, all they are doing is slowing down the wealthy to stop massively spending so as to help assist in the de-escalation of inflation of that economy. And what wealthy people do during that time period is they start to scout places to park their money. They buy more. I don't want my house, interests are going up, I'll buy it for you. I don't want this property, I'll buy it from you. That's all that's going to be happening. It is simply called the great transference of wealth. And there is a cycle for it. Ray Dalio puts it at almost every 20 years. There's something weird like this happens on a grand big picture of a 250 economic change. I'll stop, man. I'll stop. We'll do another video with all this stuff in. I don't want to bore those of you who have better things to do. But please, if you're one of those people in a very good position to almost change the game in your generation, in your family, don't sleep on 2022. You are not going to get a moment like this. I said the same thing in 2020. I said we're never going to get Bitcoin at 4,000. I don't know who listened. Right. So anyways, I'm very, 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 very south side on the S&P 500, and we're going to see what happens you know, after that. We're going to see what happens after that. The next chart that we're going to look at is NASDAQ 100, and we're actually not going to spend too much time there because, you know, I've covered that one chart the whole week, and I just felt like there was an absolute need to do that. Right. So, you know, in the private video for 365 students, which, you know, I won't put up on YouTube, but I just want to bring it up that I'm pretty sure a lot of you saw that some people were speculating a very big upside movement for this particular asset. And every time, you know, it looked like price was going to give them that upside movement, markets overall dominated with the sell side. You can see we've got 3 bearish engulfing patterns here, exactly like what we had in S&P 500. The difference is, unlike S&P 500, which is normal, because this is the primary market. This is the market that moves first. NASDAQ 100 has already taken out that low. It's taken it out, right? Markets already closed lower. Okay, so again, I say this to you guys on Sundays. Warren, don't be surprised if you see markets green, and come back and rally down. But long story short, markets are going to end up down. I'm saying it again today. You know, I don't know what's going to happen tomorrow with this victory day nonsense. I don't know if markets are going to think, the new hawkish member of the FOMC was extremely, bullish. This could be a very good 5-day run for the markets. And if it is, if we get a good 5-day recovery run, don't try and sell up here again. It's a recovery run. Let markets kind of like, rally up really, really good. And then we start looking for some sell side here. Beautiful cluster there waiting for to be sold. Otherwise, you might just get a little bit of action like this, and then markets will go down again. I am bearish though. Whatever happens, all I'm looking for is logical sell sides based on the rules I've given you guys in the course. All right, so I'm very bearish on this particular assets. The next one that we're going to look at is US 30. Right, US 30, if you remember my analysis on Sunday last week, it's one of the assets that's falling a little bit slower. Whereas NASDAQ has dropped almost over 23% to the downside, US 30 was at about 13%-ish. I believe it will follow suit. Three bearish engulfing patterns, struggling to break this low here, equalize that particular low, hasn't fully broken this demand. And even if it breaks that particular demand, there's still another demand trying to hold price today. So there's still quite a long way to go in US 30, right? So it's not to say we should look for perfect correlation, sell NASDAQ, sell this, sell that at the same time. Although this week, that's exactly what I did. I don't want to lie, it played out quite well. Is to say that something like this, US 30, definitely out of, I took profits on Friday, closed the trade. And the reason is, markets are still within a bouncing range, right? So you could still see some demand reaction, but, it would be great if markets stop somewhere there. If they don't, we've got a very beautiful fresh area of value here, bearish engulfing pattern, waiting patient to be mitigated, right? But this would require a very big, strong rally, right? I mean, all these big buys that I keep forecasting are buys that I will not care to take part of at all. And I think someone in the public Telegram group also shared, a paragraph from Adventures of a Currency Trader by Rob Booker as to why we don't do that. We don't, even if we want to sell up there, when we want to sell up there, we still will not kind of like be part of the buys going up there, because markets can stop anyway, and then you're stupid. You look stupid, right? Yes, you're right, you want to sell there, and so you thought, let me buy up and then sell down, but you become stupid. For example, I'll come back to US 30, but for example, look at what EURUSD did. All of a sudden, it was giving out these rejections at the bottom. All of a sudden, it looked like, okay, fine, price is going to go up. And so we want to sell somewhere up here, kinda, because we're now forced to take these lower sales, right? And as markets were going up, if you start to buy, all of a sudden, all those buys were liquidated. And then they definitely will continue buying with you again. But now your confidence is shaken. The moment you start to join them here, another big red candle will take it away. And then eventually markets will get there. We call that distribution, right? They're shaking off impulsive traders day in, day out, before they reach their plan. So we never want to be part of counter trends. If we're selling, you will see me personally as a swing trader. I'll just go wait at the right place. I won't be part of the crazy ride to that particular thing. But if my whiteboard was working as a trading psychology hack, because I want to teach these things, and I know, God willing, I will eventually get the time to do so. It seems like it now wants to work. It seems like my whiteboard now wants to work. Fantastic. As a trading hack, you have to remember a couple of things. Let's say we're trading in clusters. Let's say you're not just attending these things just to get signals, and you're actually getting a market education. Let's say you're taking the stuff seriously, and I hope you are. I really hope you are. And let's say you're trading in clusters of 20, and you're looking at H4 daily, H1, I don't care, right? But you're trying to get a good rhythm of 20 rule-based trades. It is difficult. If you are finding this process easy, you're doing something wrong. It is difficult to remain disciplined in the market and only find trades that meet your criteria. Do all the work to find it, but that's how we make money. A miner goes underground and mines. A soldier goes to war and shoots people. A doctor does operations for hours. Traders, it's our job to love everything about the market, to look at charts until our eyes pop out. It's the job. It's the job. It's the job. It's the job. I am a researcher. It is my job to read books and pages of information. That's what I get paid for. That's how I extract value from the world. Now, as a trader, you're doing the clustered thing, right? 20 trades up. And you've got trades like this, EURUSD, the war room guy, whoever, Leroy, whatever, said sell, NASDAQ said sell. So at the end of the day, all our indices last week were sells. S&P 500, US 30, NASDAQ, China 50. I mean, everything, pretty much the Nikkei 225, all of those things were sells. But price had to rally on Monday and Tuesday before FOMC for you to sell. That means markets had to go up before getting to all these beautiful places we're going to sell. I want you to see this today clearly. This is very important for your psychology, but also for the application of your trading. Now, trading a lot of people, love the random term for it, the random elements, like a coin toss. Now, if I flip a coin, this side is heads and the other side of the coin is tails. If I flip a coin 10 times and the coin lands on heads 7 times and lands on tails 3 times, that means I have 7 odds of calling heads, right? So if I keep flipping every day, I flip a coin, flip a coin, flip a coin, flip a coin, I will start to believe that however I flip the coin, the act of randomness, which is the coin, twisted in the air, right? Which is what a lot of people think the market is. The markets are random, right? That spin, 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 the act of randomness, I will just then refer to odds, that there's a 70% chance odds, there is a high probability that price of the coin is going to land on heads, all right? Because of the experience I have in the market, the experience I have in my thought experiment of flipping the coin. This is from Einstein, by the way, all right? But we'll get into that in module 4. I'm going to cook you guys properly in module 4. Now, the thing about the whiteboard that I'm learning right now is some things don't work. For example, the eraser won't work. So I'm running out of space already. Right, now, if that's the case, and I've found 70% heads in this case, or high probability sell setups, that means the tails or the low probability setups have very low odds of succeeding. So if I'm selling in the market as a cluster swing trader, you will never see me trying to catch the buys to the sell, because these buys to the sell will be violent and they are low odds. Eventually, I know that for markets to get to where I'm going to sell, markets have to buy up. But I don't prostitute my capital to be part of all these weird stops into the journey of that, because all these are low probability setups. These buys represent the 3 times the coin landed on tails. I'm going to focus my money, my capital, my attention on the number of times price landed on heads, and I'm going to go for that. I hope that makes sense. But from a cluster perspective, you will find out that at the end of the day, you've got 13 trades where you kept buying and losing money for no goddamn reason, and then eventually about 7 trades where you sold and made money, and where if your risk reward ratio is great, 1:3, then maybe you get out a bit profitable out of this cluster. But if your risk reward is terrible, then you actually will start to find out that you're losing money in your clusters, and that's going to be very difficult to bear. That is really going to be a difficult pill to swallow. So I would urge you, eliminate the unnecessary trading in your trading. That is, only take high probability setups, which means logically, if you need to buy something and price is coming down, you're not always going to make more money selling down and buying up, selling down and buying up. That's the trick to the markets. That's the lure to the markets. It's worse when you're supply and demand trader and you can now read direction. You take these things for granted. For new people who started trading with 365 Trading Academy and specifically supply and demand, they will never know the drama behind trading as a retail trader for 3 to 4 years before joining 365 or before joining supply and demand, because those people's perspective on the charts is very parabolically dynamic. They're like, oh my God, a few years ago, I couldn't even see this in front of me. So I want you, please don't take this strategy for granted. Even if you know that markets are going to go up, this is where they're going to chow your capital if these are low probability. All right, they're absolutely going to destroy you. And so when your psychology is down 3, 4 clusters, and you start to realize, but I've got a lot of losses. A lot of those losses, if you're good with your trading journal or you're just an honest human being with yourself, you will learn that this is called a greedy run. You're just being greedy. You want to buy it up because it's going up, but you know when to get out. That's what you tell yourself. Anyways, I know that when it gets here, it's now time to sell. The reason why, if it's selling there, I don't buy up is because I know I'm going to get choked in here. Because the only people who are supposed to be buying here are people who don't know where price is going, are people who lack that structural understanding, and they will be child. There will be data that will flash you out. I mean, just look at NASDAQ. If those of you in the private group, I did a video for you. Look at how many times NASDAQ removed buyers and still bought, trapped them and removed them again, only to sell perfectly just once. No stop loss hits, just free flow movement. Right. Don't provide the market a lot of liquidity. Keep your clusters as clean as possible. Rule-based. All right, thank you for that. Thank you for allowing me, please, to kind of like, my brother from the Philippines, I see you, man. Bless you, bless you. And while we're on the whiteboard, say it out loud as quickly as possible, every day in every way. I'm getting better and better as a trader. I'm so happy and grateful that money comes to me in increasing freaking quantities on a continuous basis. I believe this is true because it has already happened. I am grateful and thankful for everything in my life. Money is forever flowing, circulating freely in my life, and there's always a divine supply. If that's weird for you, that means you're new. This is our daily affirmations, right? It's important. Daily affirmations are absolutely important for a trader. Keep your clusters clean, folks. Keep your clusters clean. Eliminate half the silly trades. You would not lose as much money as you're losing if you stop taking every single trading setup you see. If you just cut half those trading setups and say, I only want high probability, you absolutely change the odds in your favor. You wait for some setups that take time, I'm sure, but grow your account. All right, that's the game. Right, so EURUSD did the same thing, right? Presented almost a buy rally run and then smoked those who bought, and now it's presented what they're going to call on Monday a rejection candle. You're going to see them again trying to buy, and eventually it will get up here eventually. The point is, are you alert enough, always watching the charts? Are you really that good to beat the market at its game? It's almost as saying you're such a good gambler, you will always win at a casino. You will not. The house is rigged. So we don't fight against the house. We go trade alongside the house. Right. So this is my last little rant. I'm not even going to get into anything after that. So US 30, like I said, is one of the only indices that I took profits on Friday because of where price is. You know, it's US 30 sitting in a substantial demand, number one. Number two, multiple violations still need to happen, all right? I'm not saying it's a strong place to buy. I'm simply saying while there's glass effect, US 30 is the index lagging behind a lot. Hasn't really had the deep crash, all right? Number one. Number two, has finally found a good sit and hasn't taken out the low. And so because of that, I wonder if there was enough sell pressure planted here versus all the buy pressure in this green zone. So I'll be looking to see where price stops. If it stops anywhere up here, cool. I might be lucky enough to join them in the downside. But if markets break through and come all the way up there, even better. How will I know this is going to happen? NASDAQ, S&P 500 will do it first before US 30 does. So if I use one of those charts to move and watch and study without me having to trade that one chart, I can then take the data from that one chart and start to apply it on these two other indices and make my money. Because wherever this directional flow goes, money is going to follow, right? So just watch out for that. And when it comes to US 30, the next one is NZDUSD. NZDUSD. Right, really kind of like looks like the same thing. And the reason why this chart's going to look like this and anything blah 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 USD is because dollar is very strong, which we've covered so many times in the channel, right? But we you know, there was a beautiful sale here a long time ago. You know, and when I was doing my weekly reviews of where I made money, where I got stopped out, and what I missed out on, NZDUSD was one of my biggest regrets, right? I did not take the trade. I missed the trade. I was waiting for a higher supply, and when markets came somewhere here, instead of coming a little bit up there, I was a stickler for the rules. You know, I missed it, and then I just wasn't paying attention here. All right, so I've missed two perfect swing entries, and for a swing trader, I have to tell you that is very, not terrible, but remember, one of the rules from what I just said is you have to take rule-based trades in your cluster, right? That's part A. Part B for consistent profitability is you have to be organized enough to take every single rule-based trade that your capital can allow. Because you don't know, I don't know when next the markets will present such an opportunity. As a swing trader, as a day trader, maybe it's different. But as a swing trader, I'm screwed. If markets run for 2 to 3 weeks without me, that's exactly what happened. Markets are going to make and move without me for 2 to 3 months. I mean, just this chart alone, because I was not paying, attention properly, that's about 500 pips that I missed out on. And if NZDUSD is looking like this, then AUDUSD looks the same. If NZDUSD looks like this, there are many charts that are going to copy this format that I've missed out on. All risky assets are looking like that. Right. So when markets got this red demand, I was hoping that this demand here, it used to be a demand, by the way. It's no longer a demand, it's been broken. But I was hoping that price would bounce back up there so I can get a ride in. It didn't happen. This is what I'm trying to say. So, for example, there's no buying on this chart. It's a clear downtrend. Had you tried to buy here, had you told yourself that, look, man, prices are at demand now, it's time to buy, and I'm only buying, don't worry, Leroy, I'm not stupid, I'm going to buy up until price gets to that supply. You lost money. You lost money because you thought you controlled the game, and you don't, right? They took you out. So I just didn't get onto the train, and the train didn't even happen, right? So markets have refused to take me up to the upside, and that's kind of like starting to become a problem, because the lower price gets, the less enticing this chart becomes, the more high risk it becomes. So we need to go back to the governor and see what we're dealing with. I think we've got about 300 pips left in the fall. There's still a lot of good money. Right, markets are very clear about this. Dollar will govern for this. Okay, 291 pips, almost 300 pips, like I guessed. Right, so, and there's nothing on the governing chart to stop price. This is very important. If I am lucky, we might get an original turn. Remember, we don't control those, but we can study them. If I'm lucky, I might get an original turn. And if I do, believe you me, I'm going to do better and come for that. And this is actually, if you look at the yellow squares and the stuff, that's exactly where I'm waiting. That's exactly what I keep saying. I wish price could come back there. It hasn't. But if price never goes back up there, we now need a plan B, a scalable sell entry that's going to protect us. On the weekly time frame, nothing, nada. No weekly demands to bounce price back up until price gets to a monthly demand. So we're screwed. On the daily time frame, we're going to look at a similar situation, I'm assuming. Right, so on Thursday, actually, markets then completed a bearish engulfing structure, all right, pattern. And then on Friday, on the close, markets made a retest of that pattern. And I wasn't even aware. I looked at this chart a little bit yesterday, and then I was told to kind of like, close my laptop because I promised family time, right? So then immediately I was caught. This was one of the first assets I was looking at in trying to prepare for this particular war, but I missed it, right? So this would have been a beautiful fresh touch to get into this particular trade, and then kind of like just enjoy the ride when my markets open on Monday. But I'm not in it. I'm hoping on the smaller time frames there is a deeper supply, right? So let's go try and find one that's very much close to that breakup structure at the top there, right? So right now we've got what we call a PCP, a range in market, which is most likely to break to the downside. All right, there is nothing, unless if something theatrical is going to happen in the markets with Putin, something theatrical is going to happen in the markets with the FOMC, blah, 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 stock markets, right? Then the dollar starts to retrace big time. If that happens, what's going to happen is this is the only path, right? Markets might come all the way up here and then begin to fall back down again. But if that does not happen, markets are allowed to just continue down from right there. Now, I never take trades like this. The last time I took trades like this was in 2000 and, a long time ago, 17. And I'm talking about buy stops. All right, a buy stop is where you put a limit order. I don't use them. I don't do market execution. I stopped making market execution when my mentor told me to stop. My mentor has, and probably will have a lot of money than me. And because he had so much money from the markets than me, I assumed he knew better. That's the whole point of paying for a lot of mentorship. If you pay for mentorship, you do what the mentor is saying until you can prove him or her wrong. So because I knew I didn't know what that man knew, I just followed his instructions. He told me to stop taking market execution orders. And so I have not made a market execution order in years, probably since 2015, probably. And then I stopped making buy stop and sell stop orders, about 2017. I only use buy limit and sell limit. I wait for price to come because I'm never paying attention that much. But for those of you who don't know, a buy stop order is a buy order right there. And you're simply saying when markets eventually gain enough momentum and cross over here, trigger me into the trade. And then you go up. The reason why I don't do this is because I realized that I don't deserve that money. That was the truth of the matter. That I did not deserve that money. Why? Because I was really just running on the momentum. Maybe I'm a bit too hard on myself. Maybe I want too much perfection. That's my own problem. The truth of the matter is the real buy, the profitable buy, the consistent buy happens somewhere down there. And I should have been a part of that. Right. So I don't like buy limit orders because they know them, buy stops, and also what happens when this happens, right? And what if you're not paying attention? Sell limit orders are the opposite. Sell limit orders is basically a sell stop. Sorry, a sell stop is markets are falling without you, and then you realize, oh no, markets are gonna fall. And so you put this blue line there, and then you say, when markets cross this blue line, dear markets, please trigger me into the chart. That's also fine. The problem is, once again, the true sell happened above. So for the cowboy traders in the house, and if you don't know cowboys are high risk, low probability setups, but sometimes can be possible. I can see you trying to put a sell stop here, and maybe that's going to work for you. If it does, no shame in your hustle, man. There's a bearish engulfing pattern. There's nothing stopping price logically from not doing just what I've just seen right now. Right. I won't be with you there. I would very much prefer a movement to the upside first, like this there. I don't think I'm going to get it, right? But I will faith for it. And that's because once markets start to give you a PCP, a potential continuation pattern, they're accumulating, then they're going to move to the downside, right? Expansion, retracement, or distribution, whichever fancy words you want. Break of structure, change of character, it all means the same crap, right? So if markets were to break down there, sure. But the other problem with these buy stops and sell stop orders was I realized I had to put a lot more money at risk in terms of sell stops. This is not a good place logically to put a stop loss. Sorry, not a sell stop, a stop loss, right? Because inside this entire yellow area on the daily time frame is a sell zone. It's an active sell zone. Price is actively allowed to move however it wants. You saw those Nasdaqs and S&P 500, they all sold at the top of the bearish engulfing patterns, not at the base like we're used to. Markets moved all the way to the top. So if your sell stop is somewhere here, inside the sell area, right? When markets are going up to sell at the top here, you will get liquidated even though you were right about direction, which is to go down, because markets might liquidate you and then take you out. But that might not happen. That's why it's a cowboy trade. But for those of you who are interested in what I'm going to do, I'm going to try my luck there. I'm going to wait a little bit up there on the H4 time frame. I like the imbalance. I like the fact that markets peaked. I like everything about it. I like that this is the supply that broke the structure, and then we'll see from there what happens, right? And this is if I'm looking at the sentiment and I'm looking at the dollar taking a temporary dip. We already know weekly and monthly there's nothing stopping price from falling for another 290 pips, right? In the daily time frame, this is the only problem. See this there? That's the real break of structure, right? And then the next one to worry about is all the way down there, but I'm pretty sure there's going to be so much landside activity that it won't matter. But this is what you want to see on the daily time frame. You want to see yourself very much committed to closing below that red line. I want to repeat that. By Monday, Tuesday, Wednesday, you want to see candlesticks closing on the other side of this red line that I've just drawn. Not just touching it We're not support and resistance traders. I literally mean closing as in closing. When markets literally close on the other side, and if even better, if they close and then open a new candlestick going down, right? And you can see markets haven't done that, right? So that's why sell stops here might be a little bit risky, but might be a good risk and might pay off, right? But you want to see price close a candlestick on the other side, right? I'll be looking for that upward movement first, and then we'll see each other on the scales of profitability and losses. It's what markets do this week. Right, pound CAD is the next one. If it's okay with you, I'm going to have to cool off with the teaching now and just talk what's in front of us, right? I think I've explained a lot of stuff. There's been a little bit of value added into your life today. If you've enjoyed it and you're still watching, please match the likes with how you feel, right? If you liked it, match the likes with how you feel, please. If you haven't done that already, right? So this is pound CAD. I'm going to quickly go to our governance time frame. Right, not much has changed from weeks and weeks of analysis here that this thing needs to go down. What I do notice right now, just talking to you real quick based on what I've marked up, is there's nothing we can do. If you're already not in it from these big swings, and I know I'm not in pound CAD. I know I took profits at some point and I never got back in, which was just stupid, right? But right now we've got two big demands. All these demands are poison, right? You see, I've put red boundaries around them. They are not the type of demands I would like to instruct a buy from. These demands have all been tapped more than twice, right? So we've got a problem, right? So well done supply and demand, well done bullish order block, well done for holding price about 3-4 times. But now that means buying this area is definitely a high risk. And the area below it, right, really struggled to allow price to explode forward, right? Although we had a lot of accumulation there, a lot of range in market, eventually markets exploded, but a lot of buying took place before that could happen. That's why we've got trust issues. The reverse of this is also the fact that selling at pound CAD is now tricky, because the demand hasn't been broken. So now if we're selling, we are still selling into a weak demand, but still a valid demand, which means they could use it for one more rally to really sell, right? So like, I definitely don't want to tell you guys to buy, because I will not be buying. And so all we can do is just to upgrade our sell positions, right? So the last clean sells were here. All right, markets returned back. Inside here was a daily supply. Promise you, I remember this because I took it. Let's go to the daily time frame. It was a very beautiful daily supply. There you go, clean. It's just sexy, man. It's just everything you'd want to see from our model 2, and then markets kind of like melted down. And then let's go back to the weekly so we can see what we're looking at. So on the weekly time frame, we've got this interesting structure here. Make that a little bit bigger for you. Right, if I can remove this in case it's confusing you just for now, all right, price would look like this. This is weekly, and then we'll obviously do a multiple time frame analysis in there, blah blah blah, which is why I've got that other zone inside, because after doing multiple time frame analysis, you will realize that they're very two high pressure sell points, and both of those, sorry, look at the weekly before we move there to the daily. Look how this doji candle first made its way up here, made contact with our area of value, which I'm about to show you, and then dropped, right? Now, markets really, depending on who you ask, have not really returned to this area of value. If we're to draw our area of value the way I taught it in module 1, and we draw our area of competition the way I taught it in module 1, you'll realize there was a weird hit or miss, which, you know, creates a new supply level. And this is normal. You want to see structure like this in a trend, in a sell side trend. If we're holding sales right now, we would all be very happy about how this played out, because instead of markets pushing back up, they kept creating more sell pressure order blocks, which meant more money to the sell side, which pushed price down, right? And maybe in the next war room, we can look at the currency index. We haven't done that in a long time, just to see where these currencies stand right now. But if you go now to the daily, where you're starting to plot a way in and a way out, you're going to come across some interesting data. This is the normal sell area on the weekly. This is that weird doji candlestick that makes contact with another daily supply. And so if I go back to my coding, remember our coding, those of you who attended the 2021 live classes, I think I started to emphasize that more in the 2021 live classes. Code your stuff. We have DS1 here. All right, and that's very important, right? This is DS1, daily supply number 1. But our daily supply number 1 would be NF, right? Not fresh. Okay, this is no longer fresh because we know, we can see markets literally came back, took a little bit of sell orders, and then immediately started to pend down. All right, so it's not fresh, but we've got a nice daily supply there. And then we had consolidation that took place, a whole lot of Talitha areas, however you want to see it, and eventually an imbalance. We didn't get a bearish engulfing pattern at the breakout. There was one here, which was equalized, tested, and then gave us a good sell sign, right? But this now is DS2, and DS2 is, and I'm teaching. I just said I don't want to teach. I'm teaching now. I really should like open up live classes. I actually miss teaching. I want to finish the program, so it never haunts me, and I'm almost done. I say that all the time, but I genuinely move progressively as much as I can. Right, so this is fresh. This is a fresh area of value, but it's lower than the higher supply that's not fresh. Right, that's kind of like complicated stuff. Not to understand, complicated to understand. Nothing is hard. I'm just saying it's the complicated cycle of the markets, because you are going to have to make that choice as a trader always. Where to risk? Where do you think you're going to make the most money? I just want to make sure this is clear. Make sure this is clear. And I hope this is coming across clear. You guys are understanding. I haven't done a temperature check in a long time. Right, so there we go. So we've got daily supply 1, daily supply 2. This now is that weekly supply. That's the new one that didn't touch anything. It's just kind of like hanging, right? It's hanging. And so our coding would be a little bit different. So we'd have weekly supply here on daily fresh 2, right? Also here we have weekly 1 or weekly S1, right? And if you go back to the weekly time frame, you'll see what I mean. This is all that's happened so far. We've got a weekly supply 1, and inside there is a fresh daily supply 2, but daily supply 1 is there. And this daily supply 1 has no confluence. That's why we label these things. Because remember, one of these order blocks is the right one that is linked to the golden trend of the flow of money in line with supply and demand, right? And so what price did here, which was so smart, was instead of neglecting higher sells, because they will always push for higher sells, they simply designed it this way. So how do you draw the order block for the weekly supply? Boom. You immediately create a convergence, right? So if you go back to daily, you'll see how big now, if there was just one big daily area, like the whole thing just sits on top of each other like that, very ugly. But there's markets making contact with daily supply 1, creating weekly supply 1 and daily supply 2, technically speaking, somewhere in here remaining fresh. This is the area I'm referring to, by the way, as daily supply 2 remaining fresh, right in there. And then this is the complication of it all. Where do you put your stop loss? Wait. Even me, I'm like, damn, because everything that you're going to do is fishing. This is going to be, you don't know what you're going to catch until you catch it. Because markets have every right to stop somewhere in here, but markets can go as high as they want, right? And we've seen price do that. We've seen price choose the highest supply over and over again. And so it's just something when you're doing charts by yourself to keep in mind of, right? And this is obviously weekly supply 2, right? And this is, to me, this looks like markets are preparing themselves. Remember where the governing demand that I said I don't trust, right, with the red line. All of this is price preparing themselves to defend that price doesn't go up, which is good because we don't want it to go up, but it makes it very complicated way to enter. So let's see if our Kinihashi brothers and sisters can help us clarify the noise a little bit, right? So now we can start to see the volume stuff, right? So imagine if markets were to move a little bit up, then you would have this here, and then that would remain as a fresh touch, right? You use normal candlesticks. I'm just teaching you, like, please don't forget the volume candlesticks. Try and remove as much noise as possible and give you better clarity on your order blocks, okay? And then you've got daily sub area number 2, which is fresh, which is within confluence with a weekly supply. And then you've got another weekly supply, which is lower here, which would offer you this on the daily time frame. Because remember, you can't see anything between heads or tails here on normal candlesticks, right? So now we've got daily supply 3 in another weekly supply, and then obviously this one here. This one I'm pretty sure we are not even going to care about. It's way too low. Probably get liquidated at some point. A lot of people are going to lose money there, so we won't even bother with it, right? We want to sell high, not low, and this is definitely low. The next thing I would do before even switching back to normal candlesticks, just to get an idea, is I'd realize that since I'm on the daily time frame, and yes, I agree, we are no longer at a retracement. We are now at a market reversal, because technically speaking, price has arrived at an opposing demand. I would still, just for the kicks of it, kicks and giggles, I would still pull out a bearish Fibonacci just to see what it is trying to confirm, because Fibonacci's generally tell us the best discount areas on the chart. And I'll start to realize that here is that ratio area that meets a lot of confluence with trading strategies, indicators, retail traders, support and resistance. You can even see it right here, right? All of this between 0.50 and the golden ratio is there. But if we're talking about a clean high supply take, we're looking at that, all right? So which means personally as a trader, through process of elimination via top-down analysis, and because I'm a sucker for torture, the most immediate sell area, which is this one, I'm going to ignore. That's what I've just done. That's what it's told me. It's told me that yes, this is the first place to sell, but probably ignore it. What if price does the same thing it did there in normal candlesticks? You sell here and markets go up here with a doji candle, make contact and then drop, which means you're going to get stopped out if your stop loss is here. So just ignore this area of value. And that's what I'm going to do through the use of my tools and my supply and demand reading. I'm trying to take today's class slow, but we're running out of time. All right. Now, I would have a pending order here to match the flow of money. All right. And I'm actually going to be a little bit strict and maybe put my stop loss somewhere there. And then I am going to split the risk and also have a pending order there. What do I mean? Let's say I want to risk 5% of my account and I have a specific size, right? I like risking 5% per trade if I'm locked out, right? That means not every single trade is worth 5%. It means any new trade based on what's running in the market, I'm only risking 5%. Because I'm a swing trader, most of the time I'm risking 5% of running equity versus my capital, because I hold a lot of good swings for more equity to take more positions for more swings. So when I lose money, it reduces a little bit, and then anytime I close a big trade, it replaces that in capital. Now I'll take 5% risk adverse, and I'll go 2.5 here and 2.5 there, and honestly see where the chips land. Right? That's literally all I can see. Now that I know where the Fibonacci is, right, all I'm going to do is, remove all this other stuff. And I'm going to go back to normal candlesticks just to kind of like see what it was trying to point at. Right, so now we've got normal candlesticks in front of us. Okay. Excuse me. All right. Normal. Right, it's kind of like the same stuff, right? So good place to kind of like try your luck is somewhere up here for the ultimate high sell, but anything could happen somewhere in this cluster, and I'll only be focusing on this thing here that I'm going to mark in white. If I get stopped out there, that's fine. Then I'll try somewhere up here again. That's pound CAD for you, and now you kind of like understand the logic. Help me, God, help me move quickly. Help me. Right, so because I'm gonna get into trouble, right? It's still Mother's Day, So still need, but we've got someone making a nice dinner for us at home to just celebrate my lovely partner. She's an incredible mom. Right, so we've got Palladium. We spoke about Palladium. You guys remember Palladium? I say this thing pays, blah, blah, blah. It's going to sell there. It's sold. There's a sweep, blah, 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 blah. Don't buy here. Wait for price to come to the demand. It's happening. Then I say Palladium moves very much in sync with what? With gold. Right. And it's not to say it's a copy and paste movement. It's just to say there's a primary market and a secondary market. Gold is the general primary market for all minerals, palladium, copper, silver, etc. I don't think gold's going to be bullish anytime soon. Because of that, this little buy scenario that we have here, folks, be very careful. This buy could just be a clean retest of this bearish engulfing pattern, which I have just explained to you why and how that happens. All right, so be very mindful of that. Be mindful of that. Palladium has no problem going through some violent strikes, to the downside, but it's such a beautiful asset to own. Where it is right now, it deserves market correction. This really does remind me of a gold situation on the monthly time frame. Please remember this. The next chart we're going to do together right now is gold anyways. All right, so just be mindful of this particular setup, right? So you're going to play this by the ear. Please don't have a blind pending order unless you've got a lot of running profits on your equity now, and you don't mind taking a loss just in case you miss out on a buy opportunity, right? I would want to buy in general. The structure is great. Break of market structure, order block, strong leave into the area of value. Markets finally correct, coming back to the same place where they kind of like exploded the first time. Who wouldn't want to buy a market like that? Hoping to get at least this in return, but even a projection to the upside. More importantly, Palladium looks like it has reconsolidated, right? Remember, markets were going up, 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 up. Look what it looks like before this. Just climbing, and all of a sudden, a steep removal of weeks of uptrend, right? When we call that a consolidation phase, markets will choose a spot. This is the high of that spot, this is the low of that spot, and consolidate, sideways. And that's what we had here, right? Markets then found a bottom, went to the top, came back to the bottom, went to the top, and potentially coming back to the bottom. If we're lucky, when this consolidation is done, there's always a reward because of the amount of accumulation happening in there. So markets could break to the upside, but again, markets would also break to the downside. And I think we're going to leave it to gold to decide the direction of assets for the rest of the year. We have to think gold requires a crisis, requires safe haven mindset, but also must compete with the dollar as a safe haven. The dollar has clearly been a chosen safe haven since last year. Even though gold did rally to new all-time highs earlier on this year, right? So this is what we have here on the weekly time frame, and on the daily, finally, we can see Palladium is now flirting a lot with the downside, right? But there is a strong, sense of bearish structure, starting to happen. The very fact that markets couldn't go above this supply here that we covered in the previous war room, right? So we spoke about selling up there, sure, but we also spoke about buying down here. And I'm bringing this chart back into the review to say, let's all go back and think clearly about this before we blindly buy. Let's go back and really search what it is that we want, right? And one of the first things I'm going to do, because it's a buy profile asset and it was on a swing, I'm going to use a Kinihashi candlesticks. But I'm going to use a bullish Fibonacci bottom to top and just see where the discount levels are. Because we've already left the discount levels, then those are normally first signs of bearishness, first signs of uncontrolled bearishness. But we're also going to analyze gold in just a second so that we have a full picture of what is going on. All right. Oh, man. Sorry. Start again. My mouse sensitivity is a bit off. It's one thing I just always complain about, but never get a chance to do anything about. Right. So that's a little bit fine. Right. So we've got, this is the popular area, right? The retail area, 50% area played out quite well, very much in sync with whatever support and resistance areas that exist out there, which you don't care for. We had a clean imbalance, which made this a good supply. And then markets then fell into the buy zone, or not the buy zone, but the golden ratio area. And you can see, the next buy places are actually outside 0.618 to 786, right? They're actually outside these two zones here. To me, that's actually interesting. A lot of supply and demand traders will see this as a very bullish sign. because their argument is, and I don't always trade like that, but their argument is, well, Leroy, now we get the ultimate buy low. We're getting this thing at 80% off, right? You want it at 61.8% off. We are getting it 80% off. The reason why I like the golden ratio, my level of fibs, is because I personally love buying things at discount. But as the economic man, there is an idea called the rational mind, and the rational mind, right, will run at a 50% discount. My trading course is about 75% off. But when you start making things 90% off, 95% off, it creates the perception that there's something wrong with the asset. You're pretty much giving it away for free. And in the market, when you're looking at Fibonacci and things get a bit lower and lower, below 78.6%, most of the time it's a sign of a clean sweep. That bearish cycle will just continue going down and down and down. And it's just something to be mindful of, right? So I'm not saying I've given up on this idea. I'm saying I've made a note in my journal. I'm going to go adjust the pending order, delete it, reduce the lot size, and kind of like look at these levels carefully, right? If you look at the trend lines and you apply some trend line technique, you will see there's a lot of problems like in this particular chart, right? And the reason why I do this is to just really understand, is price really going to bounce here? Because if the trend line uptrend starts all the way down there, markets will do nothing on anything on the other side of a trend line that's now been broken. This was not broken by fun. This was literally broken by a supply, a real supply. You can see the supply, you can see the imbalancement, which means there might be a need to kind of like sell a little bit deeper. All right. And so just be very mindful that if you do get a buy in that area, that buy is not built to last forever. As soon as you can, take profits or focus your capital on high probability setups, right? But on the governing time frame as to where price can go, how low can price go? Well, there are many places for price to go. But to get that confirmation, let's look at gold. Let's look at gold. Let's see what gold is telling us. Right, gold. You guys with me? We started at 4:30. The live, if I do them live, we're normally done by 6:30. It's like a 2-hour run. I'm just out of breath. I feel winded, right? Like, but yeah, we've got about 30 minutes to kind of like go on and on and on. So we can cover as many assets as possible for those of you who are happy for me to go on. And if you want me to shut up and go away, please feel free to let me know. And I will also do that. But I really have enjoyed spending my time with you as usual. Thank you so much for watching. Thank you so much for participating. And I hope this adds value to your trading, right? So I'm just going to delete all these, Fibonacci's and all that kind of stuff. I want to see for myself, right? So I did say, remember that weird pointy, candlestick that I said, look, we'll see if we can see something similar in gold on the monthly time frame. Here's the monthly time frame, and here's that area, right? See that green candlestick arriving all the way, then pushing all the way back down. And then you see what happened after that, a strong bearish engulfing pattern, trying to mitigate and fill this wick, but eventually pushing down with the intensity. And then you've got a hidden demand in the next month's candle of May, where markets are trying to push up from what? Look left, a bullish engulfing pattern, right? Arrived, taking a clean sweep to the upside. To go where? Or to, in my humble opinion, to retest a bearish structure, right? So for me, gold is going down. That's me. And this is not new. This is not new. In 2020, gold made an all-time high again. Right? All-time highs for gold are not ridiculous, right? This is the 2011 all-time high in gold. You can see it there. It's the highest point in the chart before anything else in 2011. And I can, minimize this chart if you think I'm lying, if you think I'm making up. But look what happened after gold made that all-time high. Gold fell, right? Gold fell. And then in 2020, because of COVID and markets needed a safe haven, this is August of 2020, gold then made a new all-time high and then fell. Now gold came back to that all-time high. It's probably going to fall a little bit again, right? Gold, those people, man, who think they're geniuses. Like, if things are bad in life, You know, if everything's bad in life, there's a war, buy gold, not crypto, not these crypto new things. Yeah. Price of gold has been stagnant for a very long time. If you put $1,000 in gold 5 years ago, last year, 10 years ago, right, you don't have more than, you haven't 10x your amount with gold. Don't kill yourself with money, right? Don't kill yourself with just being stubborn because it's cool to be stubborn because you think you're being wise. If you put $1,000 in gold 5 years ago and $1,000 in Bitcoin, Ethereum, XRP, I don't even care, Dogecoin, for crying out loud, you would have made more money in crypto. So yes, gold is a safe haven. I'm not arguing against it. Absolutely is. But it is not the mover of mountains when things are bad. Yes, people run to it, they dump in it. But gold has ranged between 1.5 and just below 2,000 for years. Bitcoin has moved from almost nothing to 65,000. And now, yes, it's coming down, but it'll go back up and it will double, triple the market cap of gold. It'll double, triple the market cap of the S&P 500 by 2030. I promise you that. I promise you that. Right? Anyway, so we spoke about gold. I remember telling you guys, don't buy gold, sell gold. I remember telling you guys that, look, dollar is going to go down during FOMC. Gold's going to go up a little bit. But all in all, this red arrow still stays, firm. And that's what's happened here, right? There's been a couple of plays on H4 time frame, daily time frame, where gold just respects some things, clean supply and a little burn. Now, this is fun or funny. In here is an order block on the 2-hour time frame. Now, just double check right now, but let me just quickly explain, right? And it's somewhere inside this cluster after several breaks of 2-hour time frame structures. But it's nice to see that, gold follows the rules. Sell high, right? Buy low. So we had a fresh touch here, in my humble opinion. You see this there? Markets came to gold there for the first time. Then we had a retest there. All right? Right there. Thanks, guys. I appreciate the comments. Makes sense. Can't wait for the next modules. Thank you so much, buddy. Reed, I see you. Thank you so much. Sorry. I'm just only catching up with comments now. Right, so this is a retest, and it was a very nice deep retest. And then this is literally that FOMC hype when the dollar almost fell or kind of like retraced. I covered it on Wednesday live. We said the dollar's going to fall, and it fell literally. Gold literally managed to push up, but then stopped somewhere up here. But in here on gold was an H2 order block that was broken. Now, we have to explain why, right? I mean, even me, I'm pretty sure I drew this, in hindsight, way before any of this happened. And this looked like a very good place to sell. This looked like a really good place to sell. And I think, given whatever limited information I had at that time, I'm pretty sure, gun to my head, I would have still have wanted to kind of like sell right there again and again and again, because that was a good place to sell at the time. Now, what I should have taken into account, and what I want you to take into account always, is that markets will always choose a sell high. No matter, this is a 2-hour. Logically, it doesn't really matter how you feel. If you think this is too far high, whatever is telling you that that's too far high, that's too far low, make sure you're correct when you say that. Double check that it's not anxiety, it's not a psychological factor of missing out to make money and therefore settling to sell gold here. You'll see tomorrow in my review about how much I made and how much I lost in the past 2 weeks, because I haven't done that before. This is one of my stop loss hits in gold. It was like, this was so stupid. Why would I want to sell up here when there was a logical higher supply up there, right? On the H1, it's there, it's visible. On the 2-hour time frame, that particular supply structure there is visible. Yes, markets come in for some type of drain touch here, but you can see it's quite light work. Then markets come back in again there quite deeply now, but you can see when you start to spread out on the H4 time frame, right? I probably would not have wanted to sell again here, right? If I worked with fresh touch retest, right? Which is why for me, I was looking for a play there. Now, this is now a play, but markets rallied on the news, FOMC, ADP, all that kind of liquidity stuff, right? Where it pushes markets to the extremes and the volatility that comes with those news of the days up until gold hit the supply. I got stopped out, so I'm, and that's just as simple as that. And then markets then fell again perfectly to the downside, right? So for me, I'm still bearish long-term on gold, even though I was stopped out here, right? I'm still very much bearish long-term on gold. And if we start to, I didn't want to fix the charts until we talk about it together in the war rooms. So now we can. Now that markets have removed this area of value, right here, well, what we can start to look at is if markets are trying to form a bandage, a reinforcement zone, and do not go above here. There's some weak supplies at the top that we've used. Now let's give it our own supply somewhere there. And if that's the case, then this is going to be a place to kind of like look out for in the future. I won't be setting a pin in order in gold since I recently just got stopped out of gold. It would not be clear-minded for me to do that, right? It's just part of my daily rules. Like if I make 30K by some happenstance, in a period of less than 10 trading days, which is 2 weeks in the markets, Monday to Friday, if I make 30,000 or above, whatever it is, I just don't trade for another week. I kill the euphoria. And if I get stopped out on an asset, I don't come back to that asset up until structure has changed a little bit. And the rule for that is 2 weeks. My next gold trade is 2 weeks from the day my trading journal told me I got stopped out, right? But for those of you who don't have this problem with gold and we're not stopped out, I would say watch out for this particular area in value. But these are all small time frames. So we're going to scale out on the H4 time frame. We've got a bearish engulfing pattern. And you need to, you need to decide for yourself. Was this the area of competition? It looks like it was. If it is, then this area must have been triggered on Friday, right? This area right here was probably triggered on Friday. The area of competition for this zone as we see it expand on the H4 time frame. And then finally on the daily time frame, we'll then get our final big picture, which is like just a bunch of wicks, right? So the last time we see good bodies to analyze is in H4. When I'm looking at these wicks, then I'm starting to see that this H4 area covers this daily supply perfectly. You see this there? That's what markets were rallying into on Thursday, right? Making contact here, clean, supply block here. You see that I'm using the wick of this candlestick, right? And then markets rally in there. And now, it's weird that Friday was green, but what you'd want to see if you're inside that particular price chart is probably price dropping there in gold. But again, personally, I am not invested in this market right now up until I believe I get a full reset. EURUSD, next. Don't take us time. Because we know. We know what to do. Now, guys, how many? Oh, good, beautiful. I love it when only a few people are left on the live. Just as incredible extra information to say thank you for tuning in. I'm going to tell you something real quick, like for 3 seconds. One day I'll come back and build the information of this onto our YouTube channel. All right. But I want to tell you something as quickly as possible. There is a chance that Europe right now is being stupid about crypto. All right, and I'll cover this in my crypto videos or in my wealth in 3 years. You'll get a financial note, maybe, I don't know. I will explain it to someone somewhere at some point in time. Euro is going to literally lag behind financial revolution if those old people keep making the decisions that they're making. All right, number one. Number two, I suspect. It's not really Ray Dalio's thesis. I think 80% of Ray's stuff always works. In fact, Ray, 100% of his stuff is just immaculate, right? He's not the top hedge funder of the world for no reason. And I think Ray is right. I do believe that there's going to be a slightly better acceleration than his timeline, number one. Number two, I suspect we're going to see a convergence of the dollar and euro. I suspect that. I suspect instead of Europe going mainstream crypto in a hopes to keep a reserve currency like the dollar, euro and the dollar are going to enter into some weird agreement. I can tell you right now that the IMF just signed an incredible write-off loan to Argentina, and the only clause for Argentina, guys, was that they discourage the use of cryptocurrency, right? So they are part of the institution still fighting the crypto thing. This is crazy. You know, I've been talking about inflation, all that kind of stuff. Argentina, right? Annual inflation, if I'm not mistaken, is about 53%. Let's say March 21. You really need to understand this stuff. It's wild. We are trading and freaking out at the United States inflation touching 8.9%. In last week's war room, I went through South Africa, Zambia, Kenya, America, Botswana. I looked at different inflation rates, and none of those countries came as high as the 50s, 55, 53%. And most Argentinians, when they get their salaries, they are loaded straight to crypto. Why? They believe crypto is a better inflation hedge than your currency, your salary just dwindling and disappearing. IMF has agreed with the stupid government that in order to get the bailout that they need, they will discourage the use of cryptocurrencies. Governments don't make speeches to discourage you. They legislate, they make policies, they regulate, they punish you if you're using this thing. And so I think, just triggering by Euro thing, and this is just Leroy's decision, né? You just follow what you want to follow in the war rooms. But long term, for my trading flow, for my corporate clients, for my three corporate accounts, the really, really big accounts where I can really, really, really hold very good positions for a very long time, I do not believe that this demand is substantial. Remember, for my personal accounts, I am no longer holding EURUSD. I sold out and made, I was happy, celebrated, and I've been trying to get in for a very long time. For a corporate account, we are holding because we're contractually obligated, 3-year contracts, 5-year contracts, we are still holding. And the instruction that I gave on Friday, no, on Thursday, after reviewing FOMC, I do not believe this is a substantial demand anymore. All right. I think Euro is going to be long-term weak. I think, and this is not even midterm. I'm not talking the next 6 months to a year. But for me, as a long-term positional holder, this demand could do its job, right? And someone will be like, Leroy, the demand did its job. I'm not saying it's not going to do its job. I'm simply saying this is where I am. I am not giving up any of my Euro sales from last year on the corporate accounts. That's what I'm saying to you guys. And as a retail trader for my personal accounts, I cannot wait to get into strong swing sales, and I'm holding them. Euro is going to teach us new lows. You understand? Within the next year or two, Euro is going. By the end of this year, we might start to see signs of Euro teaching us new lows very soon. And that's just my thesis, right? I mean, it sounds stupid, man. It sounds stupid going back to 60 cents. It sounds ridiculous. It sounds impossible. But what is an asset if not its profile? What are you as a human being without your personality? This thing failed to break its profile and start to become a buy profile asset. And that's perfectly fine. If you've done my course, you know what I'm talking about. I'm simply telling you that this demand that's within this downward channel, it must get chowed. It will get chowed. I declare and decree it will get chowed. And because of that, I'm looking for long-term sell setups as crypto falls, at least for the next Bitcoin going down most of 2022. Even if you get one good month, I don't care. I'm not changing my stance until the data changes. Right. So I have no interest in buying. Yes, I told you guys we're gonna take out the first demand. It did. I'm telling you now, second demand is going. Yeah. But Leroy, if you look carefully on the monthly time frame on EURUSD and on the weekly time frame on EURUSD, there is a doji candle. This is a reversal pattern. Reversal patterns are always found at a resistance or a demand where price is about to go up again. I've read the textbooks too. You are right in thinking like that. That's what they taught you. And I agree. There's a high chance that markets will go up like this. I am saying to you, all I want to do is to sell. I want to only be in sales in EURUSD. For me, these are long-term high probability setups. I am willing to wait for those sales. All right. So if you EURUSD, when I cover it, just know this is my bias. And I'm being honest about my bias. I don't care about bias. Maybe this week is a buy week. All I'm going to want to talk about is selling. All right. Because it's my world, I guess. But just be aware that I do believe that there's going to be a terrible policy mismatch right, in Europe. A terrible policy mismatch, a terrible recovery plan, right, in Europe. And it's going to lead to a weird coalition with the dollar, right, later on in life, 5 years, 6 years from now. And we're going to see utter weakness in this particular asset. That's my long-term perspective. Shake it or leave it. Right now, Euro USD, we've spoken about this many times. A perfect place to sell be up here. If you don't get it, then a high risk area place to start thinking of selling is somewhere in here. Perfect place to definitely risk it or lose it. High risk, but maybe you'll be lucky somewhere here, right? That's Euro USD. If that's fine with you, I'm going to move on because we kind of like talk about this a lot. AUD Swiss franc. I'll talk about these charts tomorrow. This is one of the charts where I got stopped out. So I thought, let me bring it up. Let me bring it up for the war room, to see if we can match up. So I had a pending order here, and clearly I got smoked. And then I think I tried twice, actually got smoked again this week. Right, so I need to kind of like stop with AUD Swiss franc, and then kind of like understand why, right? So number one, the supply side was nowhere close to it would have been better if the trend line was very close, right? And we have that kind of like psychological support on traders to kind of like also use their money to sell. Number two, arrow effect clearly bulldozed through that area of value. Number three, I want to sell again. But I have to stay out of this chart. Number four, you can't help but also look for head and shoulder patterns when prices stacked up like this, right? But all of this stuff doesn't matter now. I'm ignoring it. So let's just start all over again with AUD Swiss franc. Just delete all this bias analysis that has not worked out. And then we figure out, maybe potentially the reason why it didn't work out. I'm just going to leave this yellow. No, I'm touching the trend line. Sorry. I want to leave it in. So when I do my top-down analysis, I understand why it didn't work. So what I normally do is I just do something like this. Then I just make this whole area red. So I know that was once upon a time a supply that I tried to sell at, but it did not work. And then we're going to go ask the governor why. What's going on? What has changed? Why? And then also, was I right to even try and sell there? Right. So let's have a look now. So you can see my daily supply is inside this bearish engulfing pattern, right? Number one. Okay, I can already see the mistakes. Right. Okay. So we've got this pattern here on the monthly time frame. And I messed it up a little bit. Right, the first two touches matter. But trend line or not trend line wouldn't even make a difference. It really wouldn't make a difference. But I'm just trying to get these touches right? So these first two touches matter, right? So markets are already broken out. And maybe, poor placement of trend lines, and I didn't notice that. Or my son, is now always on my trade view as well, despite creating a profile for him, move things. I don't know, right? But this seems to be like a Leroy mistake, right? So, very, very bearish asset, found a bottom, but eventually broke out of a long-term bearish structure. And using this bullish engulfing pattern, markets sat in it, and then markets revolted up. When markets revolted up the first time with this bearish structure here, and this is what I was trying to sell. All right, I was trying to sell something here, all right, and I got stopped out a couple of times. And the truth of the matter is there was a higher supply. There. It's honestly, for me, it's as simple as that. I stuffed up, there was a better supply, and for some reason, I'll have a look again, I had a poorly drawn trend line, right? So I thought everything was happening inside the trend line range. It wasn't, number one, right? This trend line kind of like started all the way up here, right? It's not even drawn correctly yet, but my mouse sensitivity is a bit off, right? Anyways, the two touches are one, then two. Right, and then the rest of it follows suit, which would make this bullish engulfing pattern, a very, very powerful structure, because that's what broke structure in price, right? I'm drawing it blindly, right? But you get the, yeah, you basically get the point, right? So that's why that didn't work, and that's why the sell didn't work. And now markets have arrived at the supply that I'm looking at. But based on this to me looks like a PCP. I don't even think we should be trying to sell this asset, to be honest with you. And this is why I think I got stopped out of this particular trade. All right. So lesson learned, but I'll cover how much I lost in the, how much I've made in the last 2 weeks, transparency video. All right. But you know me, 5% of how much my maximum pain, which is 5% of my total account. Right. So it's never a lot of money, risk management wise. I'm emotionally in control of my trading because I risk accordingly 9 out of 10 times. I mean, you don't even need me to kind of like spend too much time on that. I've covered this a lot of times. Down in the description below are 2 very good risk management videos, right? If as long as you risk okay psychologically, you're like 60% done. The other stuff that module 4 does is then help you stay in control. Right, so I don't feel like selling, folks. I don't think it's a good idea to sell this asset. I feel like we'll come back here a month from now, and we'll realize that we were wrong, and markets are pushed to the upside. And somewhere in here where I got stopped out, markets actually are preparing to use as a trampoline to the upside. Right, somewhere in there is the formation of a strong demand. Right, just that right now is in front of a supply. Right, so I can't use my money to open the way, but what would be nice to see is something like that, which is highly unlikely that price will take that long, but that's something to look out for. On the weekly time frame, we can come this way. There we go. On the weekly time frame, it gets a little bit better, a little bit riskier, a little bit more realistic with the riskiness, right? So then we're looking at something like this here as a bearish engulf, a bullish engulfing pattern, right? And we can draw another trend line here to see that structure is particularly over with. And on the daily time frame, just to kind of like assist with clarity, I'm gonna go Hakini Hashi candlesticks, and I'm gonna really enlarge this thing, and then I'm gonna do something like this and say, well, we have 2 options inside that engulfment in the monthly, inside the weekly engulfment situation is this daily area here, area number 1, something like that, and then there's obviously area number 2 here, right? And I'm going to split the biscuit, and the reason why is because the supply at the top is still active, so this easily could be taken out by price could come back down with a lot of force from a not so broken supply, take this first demand out, and then only go up with the second one, right? So that's something to kind of like bear in mind with, right? Really, really bear in mind with. Although it's not bad, but it's not the strongest imbalance here. And there, right? None of them are good, right? So a good trader, a very, very good disciplined trader would wait for the supply to be taken out, which would actually give us more data in the process. But AUD Swiss franc, I'm switching from being bearish to being bullish. Okay, lesson learned. But we'll talk about how much I lost here. Nothing mind-boggling about. Euro pound. Don't go breaking my heart. Broke my heart. Also stopped out of Euro pound. Those are the 2 currencies that stopped me out this past week. But again, beautiful trading week. The indices made up for a lot of money and more. Really, really did. There's really actually no need for me to trade for never mind. But yeah, it was a very good trading week. It was an absolutely good trading week. And this is Euro pound. My problem with Euro pound is the beginning of my problem with pound JPY. I know there's so much downside, but I keep trying to sell, and banks are still trying to look for the perfect place to launch the long-term sell side. And in the process, I keep getting caught up with the action, right? So we knew there was going to be a cowboy area. We knew, there were going to be problems. I got tagged onto a beautiful sell in Euro pound. I was very profitable for a while, and because I swing, right? Someone's going to be like, "That's your problem. You hold these things for more than 5 days." No, that's not the problem. The problem was, it was not the right place for the swing to work. If it's the right place, this thing will hold for months. Okay, the problem isn't I was trying to hold. Someone would be like, you hold trades for 5 days, you're greedy. No, no, no. That is swing trading. The very nature, that's actually a short-term swing. All right. It's just that this supply, if you really look at it, right, it's literally nested in another supply, which was, it was fresh, but it had just made contact with the above, and markets have decided against it, creating a very strong, sharp arrow, very strong bullish momentum to the upside. So I got stopped out here once. I got another stop out there twice. It was tough, man. Thursday and Friday kicked out of this thing, and then markets are kind of like roaming around here. So we're gonna do another top-down analysis on Euro Pound. All right, and then we're gonna see what's gonna happen, because I could still hold on, right? Remember that before I became victorious over Pound JPY, I was so convinced of the sell, I missed all the clues. Markets started to create original turns. Markets started to create upside momentum. Markets started to change their minds and go, right, stop here, build demands until you have upward momentum. I don't know when they're gonna go back and sell that thing. But it was only when I moved away from my bias, right, and re-looked at the chart where I began to see again. And that's what we're about to do right now by removing all these lines and all these weird cells. And we're going to ask ourselves, what does this mean? Right? What does this mean for Euro Pound? Right. This is where I want price to go. Me, Leroy, I want it to go all the way down there. But what do markets want, right? So markets now in Euro Pound, and I'm still like quite a big sell side believer. By the way, and that's just because I'm stubborn in nature. You can ask my partner. Akin Yahashi are not showing me anything that would suggest that there's going to be a 3 to 4 to 5 month bull run yet. Akin Yahashi are just saying there was an order block there, dummy. You should have waited up there. You thought you had found the ultimate high because you're not patient, Leroy. You wanted to sell immediately to get all those pips like you did last year with Pound JPY. You're not learning a lesson, right? And that's it. If you can't see the cluster creation clearly on normal candlesticks, switch, man. Just go to Kinachi, look at the volume, come back, look at the volume, come back. Look at this. We're a bullish engulfing pattern. We had a bullish engulfing pattern. 365 traders, you'd know that next we expect one red candle. It's normal. We understand why, right? But we also did expect price to go up. It did not. It did not. So when we see a new bullish engulfing pattern, after seeing what happened here, I'm not so quick to say markets now must go goop, 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 right, and shoot up. I'm more like, what is going on? I missed it. It was right there in front of me, and I missed it. Price really wanted this area to be mitigated. You can see from an order block perspective, I've taught you, right? It's actually technically from a volume-based candlestick, the first time markets have arrived, and I missed it. I missed it because I was focused on lower sells, and I got stopped up. So it's a little bit sad. What I will be doing with Euro Pound is watching it like a hawk for the next week or two. And because I need to see if there's going to be a decision made here. Well, what does this mean? Is this going to be sustained to the upside? Because if it is, are we looking for here? And this is me, again, waiting for sales. But I don't mind taking a very, very clear structured buy if that's what price is really doing, right? I just need to be very clear about where it's going, right? Because right now, on the weekly time frame, it's like a little wiki kiss, right? But on a Kinihashi, you might get a little bit of a better look, right? That there's like long-term selling in this area, long-term selling in this area, right? So we'll see. So my best guess to you is what? We'll wait and see, right? But tomorrow we'll discuss how much I lost on this particular two trades, AUD Swiss franc and Euro Pound, right? Now back to our lists. And we've got 3 more assets left after this, ladies and gentlemen. I know we're 10 minutes beyond time. I appreciate you. We're going to look at silver. Right, so silver, same thing. I'm assuming like Palladium, which is we're really, hanging on every move that gold is going to make. Every move that gold is going to make. All right, we are. Oh, this is gold. Sorry, I want silver. XAGUSD is silver. Right. So we are, well, anyways, don't forget about gold, what you said about gold. We're really like hanging on to a gold perspective here when it comes to silver. And I'm still a little bit bearish on silver. I am very much a little bit bearish on silver. I've enjoyed selling once or twice on silver, and it'll be nice to get another entry, another play, right? Ugh, sorry. Right, so silver, let's start again. Sorry, I moved too quickly. Silver on the governing time frame, really not promising much. There's a massive consolidation outside of supply. That could mean two things. It means all the buyers here are calling for more buyers and want to break this thing to go up, or all the sellers are actually consolidating a lot of power to go all the way back down, right? And then we're going to live in a weird world where price of silver is below 14, 15, per ounce or whatever. We'll see how that goes, right? But there's a sweeping area here, just depending on how you want to draw it, okay, right? But at some point, this area, however it's drawn, needs to get broken. At some point, this particular area, however straight your line is, however it's drawn, whether you draw from the base or the wick, needs to get broken. When it gets broken, we're going to have trouble, right? So we've got a governing supply there that we can clearly see that's been identified, that made contact with, some action up there. And then you've got a weekly supply somewhere there. There we go, making its way, a new weekly supply. But just be careful. It's almost very similar to what happened to me with Euro Pound, right? Where you got a supply listed in another supply, and then there's something a little bit higher, and then markets kind of like explode up. We will know the sentiment of silver at some point based on how gold moves, right? But right now, if gold continues to the downside, this is good to go to the downside. Very good to go to the downside. The daily chart is what matters a lot. Right, and it's in the daily chart. I can remove this. It's just a dramatic line, right? In the daily chart, we can see a couple of things. We see this weird turn and an imbalance, then a fresh touch, and then we know a retest. You know the rules. Once you get a fresh touch, look out for a retest, because it's going to run like crazy. Look at the retest, ran very pretty. But as the retest was running, the retest was also creating its own areas of value. So let's, for fun, let's say, draw a fib. This Fibonacci is not accurate because markets actually haven't given us a strong swing low, a strong turn to the bottom, right? So we're just guesstimating here if there were any order blocks that would match up that whole area. And here we have our golden ratio right now in the estimate. We have a golden ratio area, which is telling us that you might get a very strong pump up to silver one day if things are the way they are right now, and if markets were to go up. And this would be a very good place to sell, right? Somewhere in there. That's what that golden ratio area is telling you. It is not yet a good confirmation because, like I said, it's very difficult to draw a swing low right now. And really, what we're asking for is a strong pump in price for a while, which we need to see in gold as well. Right, like a $2 change, a 10% increase on silver, to kind of like get this particular pump going on the daily time frame, right? So only time will tell, but for some clear downside, I'm grading. That's a good place. This is a good structure right there. You can see that's the last time price hit that point, and then markets have flirted many times just below, right? Markets went below it, but then created their own break of structure zone. So if price was to close below these two white lines, were golden, the other line is red. If price was to close below this red line like this, believe you me, it'll be almost better to try to sell here if it's clean, right? Because markets might be in a rush to go there. And if that does not work, or you don't feel safe, then this will be the best money maker. Remember my example that I used with Bitcoin. If Bitcoin's $100 and it's targeting $500, you're gonna 5x your money. But if markets were to go and give you a chance to sell more, or whatever, in this inverse relationship, you're gonna make more because you're selling from a little bit of a higher position all the way down. Just like with Bitcoin, you'd be buying from a much more lower position, $50 instead of $100, and going back up. All right. So either way, look out for one, not yet valid, no imbalance. This is not a rule-based trade right now. And number two, you want this to break structure, both structures. All right, that's silver. CAD Swiss franc is the the next one, but we're going to come to a place where markets are approaching the end. Okay, marked very clean. Retracement area buy zone. Retracement area buy zone right there. Retracement area buy zone right there. I mean, CAD. You saw oil earlier on is 110, right? So retracement area buy zone, right? That's CAD Swiss franc. I'm not gonna waste your time there. AUDUSD. This to me reminds me of NZDUSD that we started off with, right? Once you miss this beautiful runs, we got a nice come back to Jesus moment here. If you're paying attention, I was not. And then markets kind of like continue to the downside, right? And so, there's really not much to do on this chart. I'm not really into to kind of like setting low. But if we go to the governor, for information. It's gonna be very difficult to read through. Right, you're gonna see an interesting pattern. And if you're paying attention in price, because price is fractal, you're gonna think this reminds me of indices. The multiple 1, 2, 3 bearish engulfing pattern. Why? Because AUDUSD, EURUSD, these are all risk-sensitive assets. And the same people, smart money, not retail traders, buying and selling across NASDAQ, S&P, AUSD, blah, blah, blah. I mean, Ray Dalio's portfolio once upon a time was 60% Forex and the rest investments. These guys invest in the Forex market. They hold for long times. Like Warren Buffett's greatest multi-billionaire trade was a EURUSD sell idea you plugged in 2008, and he's still holding a multi-billion sell position in EURUSD. All right, it's possible to read it. Anyways, I don't want to preach. There it is. There, the same thing you saw on the daily time frame on the indices, right there on the monthly chart of AUDUSD. My eyes catch these things quite quickly because I do my job. My job every day is to look at charts. That's the job. That's the job. So you do the job. Right. So we've got, and look at this candlestick. Look at this. This is telling us that there was a strong bullish momentum at the beginning of the month. And let's see if we can find it on the daily or running towards that. It didn't even last for long. Right. Where's the month of May? Right. There's the opening of May. Push, right, for 4 days, okay, and then now May is going down, and what it looks like to me on the governing time frame is that price then arrived at where we generally want to see markets arrive if they're going to respect our areas of value. And now there might be a biggish candle by the time it closes, or this could close as a red candle to the downside, right? Just be very, very mindful of that. And that would be very good for structure, because this is literally for me a bleeding structure, right? Like some weakness is needed, number one. Number two, the partner here is USD, right? We want to see more strength in the dollar. That's what smart money is doing right now. So we would not be too surprised with that. This weird demand here has been taken out, right? As pointed out in that little white line. I have no idea what this rectangle is. Maybe it's a weekly demand. I don't know, but it's definitely not a governing, demand. Right? Yeah, it's definitely a weekly demand where the next stop would be for price right now. Nothing, you see these areas, man. If you miss them once, you're screwed. There's nothing on the weekly that could potentially allow you to enter. Right? There's no confluence for any new type of trade. Right? So if you're lucky in price on AUDUSD, and if you're patient enough to wait, then this could be a good place where they will fake you out. Not the most accurate mouse drawing, and this could be a good place to get a fresh touch, right? But it's very unlikely now. It's always going to take time, because if you think about the structure that they need to create along the way, right, the lower lows, right? So this would be a nice higher low, right? High here, higher low there, and then markets need to kind of like arc up to create a lower low type of situation. So long term, look out for that AUDUSD. Unfortunately, not something that you can take right now. I mean, you could on the smaller time frames, right? All of this, I'm giving you swing direction. The day traders, you figure out the your entries for when you get in and get out, right? But this is a downtrend pattern. Simple as that. NZDJPY, don't forget about the monetary policy divergence, which we're speaking about. This chart, guys, this reminds me of US dollar. Guys, it's so important, right? If you look at USDJPY, right, you're gonna see something crazy, like whatever. But if you look at DXY as a chart, there was this weird upward motion that was strong to the downside, a clean order block that we wanted. Price didn't get to it on time and then went up. I'll show you right now, DXY, and I don't think it's on the daily. I think it's DXY H4, but I could be wrong. This DXY daily looks more sober, right? Just a clean market consolidation at the top there, nothing too crazy. But if you look at H4 DXY, look at the pattern traders, right? You see that? Ladies and gentlemen, I've really enjoyed this. One more time, if you haven't liked, please do like the video. I will be signing out after this chart. Right, there we go. Upward momentum, push to the downside, ignored our main order block. In fact, if you came on Wednesday to the live stream Powell's thing, you should have heard me sound so snobbish. I was like, I'm not even going to buy at this order block down here because there's a better order block a little bit lower. And lo and behold, without my invitation, while things were going on at 1 a.m., markets used the exact same order block I did not want to use and went up. The reason why I didn't want to use it is because my rules tell me to avoid them. If there's an order block there and there's a lower order block, go for the lower order block. It is safe. So I have no regrets. I made no losses on this particular chart, but yes, I made no money, but that's perfectly fine. Right, so I'm simply saying the fact that markets were ranging like this here and then doing that and then a big sweep down on the dollar reminds me of NZDJPY on daily. Why? Because JPY by design is going to be kept very weak, all right, and that could allow the Kiwi to actually outperform and just keep pushing to the upside. And that same pattern that I saw on the dollar H4 is the same pattern I'm seeing on QE daily. All right, so you see a little bit of a range there, a sharp decline, and maybe, just maybe, this little doji here might save the day for the upside. This is, of course, a cowboy, trade, as I've marked it out, and only because my rules would stipulate that if there's a lower demand, take it. The lower demand is within the golden ratio, but this is very possible, right? Markets have been planting a lot of supply setups, right? First supply, clean imbalance, second bearish engulfing pattern, retest, new bearish engulfing pattern. So this area here might actually receive a lot of seller resistance, but it could also be the area where things turn around. Based on this relationship here, you can see QE has been very strong, and I don't see why it wouldn't continue to be strong for the next month or so. People, I appreciate you. Thank you so much for sticking around. Thank you for watching. Thank you for being 365 diehards. If you have not yet subscribed, please do subscribe. If you haven't liked the video, please like the video. If you haven't actually joined us, in our course, please do. The course was 75% off. That unfortunately is no longer the case. The deadline for that has long passed. But up until all 365 students are moved onto the new platform, the course is now 50% off, which is $200 versus, I think, the full $400. So, jump on that wave before you lose it. The new platform will look like this. And I think that's going to happen this week. Like I said, we already have our module 1 built in, everything is inside. I really have enjoyed. I built this. It wasn't like I actually hired someone to do this. I've been working my butt off myself doing this. Right. Okay, my kids, I'm streaming, my kids streaming, so internet is a little bit delayed. And then I have to log in again. Anyways, that's what it's gonna look like. It's absolutely gonna be stunning. So I would absolutely, advise you guys. Okay, well, I'm not gonna show you the passwords and stuff. I'd absolutely advise you guys to just jump on this as quickly as possible. I thought it'd be cool to show it, but You know, it's been weird and there's login and stuff like that. But yeah, I would definitely suggest you guys log in. Thank you so much. Tomorrow I will be dropping as usual my wins and losses for the last 2 weeks because I haven't done it in a long time. And then you guys can actually kind of like see what that looks like. I've been extremely profitable only because I sold all those indices. And I had only 2 stop outs: AUD, Swiss franc, euro, pound, GBP, and gold. Right, that's short gold trade. All right, there we go. Explain that as we go along, but I had to get the practical experience within a private equity firm. So it's just module 1 and module 2. Those of you already in the course would have this. So this is what it will look like. It's going to have quizzes. It's going to have reviews. You can actually see how long each video is in there in the background. There's always going to be stuff to do at the bottom, cover topics. It's incredible. I'm so happy. I'm absolutely so happy with the progress here. Anyways, guys, I appreciate you. Thank you. Cheers. Have a good night. Have a good week. Goodbye. Hello, mic check. That's the course. Just ignore that. Goodbye, everybody. Thank you. Cheers.